I'll be the moderator for the panel. I'm an investment analyst at JSquare, an early-stage VC fund based in Singapore, focused on crypto. I think we'll give each of the panelists a chance to introduce themselves and their respective organizations.
Okay, my name is Jeffrey Brewer. I'm a venture advisor at Kophy, but also a venture advisor at Moderator VC, which is a blockchain-focused VC fund. Been in this space since 2014. I've seen a lot come and go, and yeah, happy to talk about indeed some of the do's and don'ts when it comes to RWA investment from a VC perspective.
I am Bauer from Mage Group. As mentioned, I do direct investment into technology startup, specifically focused in India. But that aspect, we mainly focus in the Web2 space. I've done investment into EV bike, EV charging station, cold storage solution platform, etc. Indirectly, I am a partner of two VC funds called True Global Ventures, AUM about $280 million US. The first fund we specifically focus in the Web3 space, early backer of Animoca Brands and Sandbox. Second fund specifically focus in AI in the growth stage. Minimum ARR is 10 million, Series B onward. So,
I'm Calvin Ng from Plutus VC. We are a Hong Kong-based crypto fund started in 2016. We have invested more than 370 over projects all over the world. And me, myself, I'm a co-founder of Mantra, the token that went up to 6 billion and then back down to 100 million.
that's okay. As long as you're staying in the space, we'll come back.
For disclaimer, I didn't rock it.
I guess jumping in, there's no shortage of RWA startups pitching VCs, but only a fraction are venture grade. What's the single strongest indicator that an RWA startup is actually venture backable? I guess we'll start with you, Jeffrey.
VC investment into RWA is, for me or for us, mostly about infrastructure. Right, there are no one asset play projects that we would be investing in, because that's like gaming, right? Like you can invest in a game, but if that game flops, then there's nothing there anymore. So we're quite, in that sense, fundamental investors. So we will be looking at infrastructure when you come to settlements, legal compliance, liquidity, all those kind of things. That would be investable RWA projects when it comes to startups. Not per definition a single asset play, because when it comes to RWA, me personally, it's more an upgrade of infrastructure than it is a new way of investment.
I would share from I guess, generic VC perspective of analyzing startups. I think the key is the people, the founders. Are they a single founder? Do they have co-founders? Single founder is a super lonely journey, super challenging way to handle your own startup. So because imagine it's a one-man band, even from HR perspective, from legal perspective, from marketing, from business outreach, from investor outreach, you have to do everything by yourself. So I guess I will feel hesitate if I deal with a single founder startup. And I also, from True Global Ventures perspective, we always deal with founders that has to be serial entrepreneur, so that must not be your first startup, because we do want you to have experience, exited your previous startup before you come approach us. And second, you must heavily invest from your own money into your startup before you talk to us, because having skin in the game matters the most. So,
Okay, I think RWA is the future, and currently I see that in the market there's three types of channel for the investment. The first one would be, as you say, the platforms, the technologies, and so on, and the exchanges that enables RWAs to happen. And then we have the single product category, be it gold, properties, and so forth. And the third category is a mix between the two. So in order to attract VCs today, you can see that even at the conference, the single gold project now has their own technology, has their own chain, has their own platform, so that they can extend further beyond gold, maybe adding silver and other types of commodities in the future. So these three categories actually do attract all VCs. Why I say that? VCs will invest in the first and probably the third, and VCs will use the second. If the second can be like any kind of yield-producing products like stablecoins and so forth, so VCs do park our money there to earn the interest.
I guess piggybacking off of that, stablecoins and T-bills have found product market fit on chain. What other RWA asset types do you think will come on chain next?
Me. Okay, so stablecoin is the number one product today, right? And I see that in the market, there are money market funds. Money market funds are making a good impact onto the RWA space. Now, the target is one of the key things in the RWA space. Just now, the panel with Wara, we also spoke about whether it's institutional investors or it is retail investors. We see that certain strategies that works today in the money market fund, especially, is to first target the institutional investors. That's where they have a lot of money. They need to park it somewhere. They need to earn some yield somewhere. And then open this up back to the retail market. So at least you see that in a few other platforms as well. You see that in this strategy is being used by Ondo, right? They take BlackRock's money, slap it there so that it looks beautiful. I have hundreds of millions already buying my yields. So why not the retail investors as well? So we see that these are the kind of things that is working in the market. And as well, we see that what we believe is that for RWA currently to work, we are still in its early stage. For RWA to work is to take an existing business that's already revenue earning in the market and pack it in, and then you tokenize it so that people have the trust and belief in the particular product. I can give one example that I personally also invested is a project called Datuk Durian in Malaysia, whereby they tokenize durian plantation that is already there and already fruiting and already making money. So this project just took like less than 3 months, and they raised their first round, totally sold. And this month they are paying their first distribution yields itself. So these are the kind of solid projects whereby you really take something that is earning money in the market, profitable, and then you put it into tokenization. And as a VC, we usually ask, if you are profitable, why do you need to tokenize, right?
Yeah, I guess in the past, RWAs have had a bit of an adverse selection problem with TradFi bringing low-grade assets on-chain, kind of dumping on crypto. How do we see that evolving in the future, and how do we stop TradFi from dumping their bags on us? Yes.
Yeah, like what the previous speaker also said is that, like, of course, like tokenizing things that you know, right? What I still see a lot in the market is that people are RWAing things that actually didn't work or doesn't work. But RWA is not going to solve your problem, right? It's if you have a bad business and you're going to RWA that, it's not going to solve it. Those kind of projects will still have to weed it out. Actually, funny thing was that a couple of weeks ago I was in a room full of lawyers. Not the best place to be, by the way, but they say like, oh, RWA, like, we've been doing that for decades, and that's true, right? Like, if you have a building and you want to like split it up, you buy that with a company, and then you issue shares, and that's it, right? That's technically a similar way of tokenizing a real asset that's bigger than the ticket size. So the only thing here, also there, is that the rails and the payment and the ticket sizes can be lower if you tokenize it, because there's an optimization of the actual administration of it. But then still you have, because that's then easier to do, the biggest problem at that point is indeed legal and compliance. Because if I buy something here legally in Hong Kong and I get tokens in return from that, and I meet, for instance, say somebody from a region that has economic sanctions towards it, I should not be able just to send them that tokens and he pays me money, right? So there is a huge gap, or at least a huge risk. And there I think that VCs could play a role into investing into projects that will enable or basically check those kind of transactions or those kind of compliance issues.
Got it. In terms of bringing RWAs on chain, liquidity has been a frequently brought up issue. How do you guys look at that, and which asset types do you think have the ability to be liquid on chain?
Funds, perhaps. But speaking about what he said, from the regulatory perspective, compliance perspective, I think it's important to analyze if the project is incorporated in, certain specific jurisdiction. I think Hong Kong, we position ourselves very well. Our government is very proactive, stepping up, I guess, compared to other Southeast Asia countries to try to regulate the digital asset space. I think this is important because buying something legally, if you're able to sell it elsewhere legally legit, is important. Funds will be first, I guess, more so easily to tokenize, and I think this gives really great opportunities to the general public. As Yap mentioned, originally maybe the minimum ticket size to join a fund, maybe minimum $5 to join, right? But now maybe as fractional, very small amount of money you can actually enter. I think that's the opportunity from funds perspective. You invested more than 370 plus. What do you think?
Those are pump. So let me add to the former two questions. Let me add a little bit stuff. So number one is the question about liquidity. There is no liquidity in the market today. So there is no worries whereby RWA, fake RWA projects and so on can dump on the retail market, because the retail market is not buying into the RWA space at this very moment. So what is the strategy for liquidity? This is the billion-dollar question. Actually, I'm not sure whether I should say it or not even.
Off the record, we're sharing, is within
So literally, the retail markets, what is the missing component? Why are people so willing to buy meme coins, ICO tokens, and so on. Just a
Greed?
single word. Yes, exactly, greed. Greed, right? There is missing component in RWA, and that is greed, right?
FOMO.
And there's no FOMO at all. So that didn't create the demand in the RWA space. But you can systematically and using strategically to actually create this space if you know the mechanics to do it.
Yeah, the question is, of course, do you want retail in like your RWA?
Oh, you need retail. If you are only institutional, it will never work. That's why I mean, my fund is in Hong Kong. It's not so good to say that, but the way Hong Kong is
We
going,
welcome you. Come on.
the way Hong Kong is going, right? It won't work. You just ban USDT, you just ban USDC. Everybody is holding USDT and USDC. Who's going to buy into it? You would take adoption of the new stablecoin, I think probably announcing end of this month or next month after Chinese New Year. It would take time for the market to adopt this, right? And your USDT has to be forced and changed into Hong Kong dollars after this month, I think.
But there's so much information discrepancy between professional investors that are now doing basically the traditional way of RWA and the retail investor, right? So indeed what the moderator said is like, how do we prevent that those professional investors just don't dump the shitty projects on the retail investor?
It has been happening all along. That's how funds like us makes our money, right? And that's also how...
But do you want that?
No, but it's also how the traditional stock market works. Before any companies goes IPO, I was working in the traditional finance world, the PE funds buy into the IPO, pre-IPO, and then when it IPOs, we dump on the retail.
Correct, but when you're having...
So there's nothing wrong with crypto.
But
Crypto
if you're
is just
stocks,
mimicking what is happening in TradeFi.
correct, but when you're having stocks, you have an actual operating business, you have audited accounts, you have profit and loss. When you're having a meme coin, you don't have that.
Exactly. That is why the ICO world is moving towards RWA. That's what I believe, right? Before, you don't need anything. You just need to sell a dream. And people just need to believe in the dream and that technology, that utility will exist in years to come. And that's exactly what's happened to many protocols. When they mint their tokens, when they sell their tokens, there were no technologies. And we invested like 3 years. Example, Polkadot. We invested, I think, 3.5, 4 years before they even do their TGE. Right?
That was a long time ago.
Yes, that was a long time ago. And then we made 57x out of it. We believe in the founder's dream. It's the same thing. It's the same thing.
But that's not an RWA. You're invested...
That's not an RWA.
You're invested as a VC into something that like gets you future tokens or future equity, right?
No equity at all.
Okay, with future tokens then.
Error tokens.
But like when you're talking about RWA, you're talking about a real world asset, right? That's a totally different way of investing, right? You cannot invest, as you say, what you just said, like you cannot invest in something that's future hype because it's a real world asset.
RWA, you have something.
We're talking about T-bills here. We're talking about equity. We're talking about funds that are already existing.
Yeah.
We're not talking about, of course, you're investing in a fund because you hope that in the future it will go bigger, but that fund already has a track record. That fund already has equity or liquidity of LPs in there that is going to invest. But that has no, like, when you were investing in Polkadot, there were only the investors, only the founders, and you believed in the vision of the founders. But there was no asset at all where you were able to invest in. So as a VC, you cannot call that an RWA investment.
No, I didn't say that's an RWA investment. I call it that's an ICO investment. And I said that all these ICO investments are slowly morphing into RWA. That's what I mean.
I actually have a question, Kelvin. You invested more than 370 plus projects in the digital asset space. Me, myself, I focus on equity investment. So I wouldn't say, I'm not an RWA expert. Okay, I understand it, I understand the concept. How do you screen RWA startups? How do you judge them if they are a scam or not?
Okay. All honesty, in 2017, we don't care. We have no time, right? One pitch and we were like, yes or
No.
maybe. There's no in 2017.
No, wow.
Yeah. It's a fact. There's no. If I like you, it's $500,000. If I don't like you, it's $50,000. Yes, that's 2017.
I wish I knew you earlier, Kelvin.
That's how it's about 70% of the coins pump in 2017. You just have to check the statistics. I'm not lying, right? That's how 2017 is.
So are you saying
And then
you
come
don't scan-
2021,
you don't screen them?
there's no time to screen. I do a pitch, and then I say that, can I have this document, that document? Okay, sir, thank you very much. Your allocation is going to the next guy. That's 2017.
How about now? How about now?
Oh, now the power is back to the VCs. Whatever we ask, you have to give. Right? That's why I love the bear market.
How about you? What is your tips? How do you really judge a genuine RWA startup?
Like I said earlier, right? Infrastructure, right? Like a RWA startup is creating infrastructure for the institutional investor, for the financial institutions. That's also going to be their exit strategy, right? So they will be helping all more to the fintech side than any token or Web3 side at all. Like it's more and more towards helping bigger investment banks tokenize the things that they already have, and then make it easier to say even create great ETFs, right? And then do the whole custody, legal, all those kind of things. Make it like now, if you want to create an ETF, it probably costs you like say $500,000 to create one bigger ETF, right? Like I see that going towards maybe, I don't know, 50,000 US, right? Just to create an ETF because of those kind of like infrastructures that are being created. So for me personally, I see way more into the infrastructure side than any hype for retail or FOMO or that kind of thing. Because like what Kevin said, right? Like with our fund, we did 29 investments over the last 3.5 years.
Only in the token side or equity both?
Token and equity side, right? 21 of them are still in business, right? So that's quite a unique, and we'll probably end up, I don't know, with 15, right? But that's quite an achievement because we're very fundamental investors, right? We per definition didn't do any FOMO, any like what Kelvin said, like if we just like you, we will put money in. No, like we really are fundamental investors looking at things that could have a fintech exit or something else towards institutions.
We have 1 more minute.
Oops, I'm sorry. Back to you.
So I just want to add one thing. That's why this world of venture capital and investment is so beautiful. You have VCs for everything. You have VCs that want to go slower. You have VCs that want to go faster and help you to push make money faster, right? There's everything for everybody. It's just the right fit.
So what is
The question is, where is the higher ROI, right?
It depends. You probably hit a better ROI than me in 10 years, but I hit a faster ROI than you in 2 years.
Well, everybody has their own strategy.
It's
at
about
the end of the
liquidity.
day, yes.
I guess ending question for everybody. If macro shifts today,
I think, yeah, one key takeaway from everyone makes sense.
one key takeaway from everybody.
Me first? Okay. So I think the future is tokenization, where and most utility token, my prediction, more than 50% will go towards RWA, and companies that do not adopt tokenization will be totally outdated in 5 to 10 years.
My key takeaway is to have better infrastructure, especially how from the cybersecurity side. That part is very important when you build any RWA project. Yes, so that's my key takeaway. Another one would be you got to get the contact from these two gentlemen for sure at the end.
Okay, my key takeaway is indeed also that RWA is not a new type of investment. It's a new type of technology that will enable people to do quicker transactions. So that would be the most key takeaway. Yeah.
Thank you guys for all your time.